Hello and welcome to the DebtCircle Sundown brief for 1st June 2026. I'm Leela, and here are today's key updates from the debt markets, fixed income, liquidity, and macro environment. Let's begin with the highest yielding corporate bonds traded today. Among listed corporate bonds, Crazy Bee Services Limited topped the chart with a yield of 18.59%, followed by Muthoot Capital Services at 17.44%, and Unifin's Capital India, where multiple issuances traded above 17% yields. On the unlisted side, Vadraj Cement led at nearly 14.8%, while names like Apex Homes, Bhumika Shopping Centre, and M Pocket Financial Services traded around the 14% mark. Moving to mutual fund debt activity, sentiment remained cautious. Debt mutual funds saw gross purchases of over 15,200 crore rupees, but gross sales crossed 20,500 crore rupees, resulting in a net outflow of 5,360 crore rupees for the day. This suggests investors are continuing to book profits or shift allocations amid rate uncertainty. In the FPI debt market, flows were mixed. The fully accessible route, or FAR segment, continued to attract strong foreign interest with a net inflow of over 2,600 crore rupees, while the general debt category witnessed outflows. This reflects continued confidence in sovereign debt accessibility despite broader market volatility. Now, let's talk interest rates and liquidity. Money market rates remain stable, with the call rate at 5.30% and repo-related rates hovering slightly above 5%. Liquidity conditions stayed tight, with the RBI effectively absorbing over 1.5 lakh crore rupees, signaling a controlled stance on excess liquidity. In the government bond market, yields remained elevated. India's 10-year bond yield stood at 7.02%, while the 30-year yield touched 7.66%, indicating persistent caution around inflation, crude oil prices, and fiscal borrowing expectations. On the currency front, the Indian rupee strengthened marginally, with the US dollar trading at 94.92 rupees, slightly better than the previous session. The euro, pound, and yuan also weakened modestly against the rupee. In commodities, gold prices corrected, with 24-carat gold falling to 15,622 rupees per 10 grams, while silver remained flat. However, crude oil moved higher to $93.63 per barrel, which remains an important risk factor for inflation and bond yields going ahead. Equity markets ended lower today, with the Sensex closing at 74,267 and the Nifty at 23,382, reflecting some profit booking amid global uncertainty. Now to the primary bond market issuances. NHPC Limited launched a sizable 2,000 crore rupee bond issue with a strong AAA rating, while 361 Prime Limited announced a 1,500 crore rupee issuance. Other notable issuers included Hero FinCorp, Navi Finserv, IIFL Finance, and Early Salary Services, reflecting continued fundraising activity across financial services and infrastructure-linked sectors. To sum it up, today's market reflects a mix of tight liquidity, elevated bond yields, selective foreign inflows, and cautious investor sentiment. Rising crude prices and global uncertainty continue to shape debt market direction, while primary issuances remain active. That's all for today's DebtCircle Sundown brief. I'm Leela. Thank you for joining me, and I'll see you again tomorrow with another update from the world of debt markets. Have a great evening.